Looking at the recent figures from the Nigerian Stock Exchange that is being celebrated by people in government, the Nigerian Stock Exchange grew at about 46% in 2023. When compared to S&P 500, which grew at 26%, it dwarfs it. Also, Shanghai Stock Exchange, which even dropped in value by minus 3.7%, Johannesburg 5.2%, Ghana and Nairobi, which are 28% and minus 10% respectively. It looks good on paper. Even the 5-year average growth, the Nigerian Stock Exchange is at about 20%, while the S&P 500 is at 16%. But the problem is that it doesn't tell the whole story. Before we see the real value that investors actually gained, it seems that stock price manipulation might be going on, while the regulators look the other way. Because it doesn't make any sense that the economy is on a nosedive. Many multinationals are leaving Nigeria en masse, and there is serious inflation, and the stock market is growing. It doesn't make any sense. This is because we know what makes a stock price to rise in other markets. Why is that of Nigeria different? A few factors drive the increase of the stock price of a company. One is the company might have invented something new, a new technology that they currently have a monopoly on. Investors will rush to buy their stocks because they will say, these people will enjoy a monopoly maybe 3 years or 5 years. It's time to make money from them. The more people that are looking to buy the stocks, the higher it goes in price. Another factor that affects the increase of the stock price of a company is a company that consistently posts huge profits and revenue. Investors will always be looking to buy such stock because they know that dividend and benefits are guaranteed. That's not the case in Nigeria. In fact, if you look at the companies with the highest gain in the stock market, you can't say what they did, the extraordinary thing they did to warrant such increase in the stock price, which might explain some people might be manipulating the stock price. Now, when they say that Nigeria Stock Exchange grew by 46% in 2023, that investors made billions, if not trillions of naira in profits, what does that mean in the real value when you understand that inflation is at about 30%? Take for instance, an investor invested $1 million into the Nigerian stock market about 5 years ago. At that time, let's assume the exchange rate was about 500 naira to $1. Compare that to today. The naira is exchanging for about 1,360 naira to $1. That's almost 1,400 naira, which is almost 200% drop in value, because it was exchanging at about 500 naira 5 years ago when the person bought the stocks. So now, compare the percentage to the drop in value. The Nigerian Stock Exchange gained 46%, while the currency dropped by 200%. It's not a real value. If that person decides, okay, this is a huge profit, I want to withdraw my money, I want to take that naira and convert it to dollars, the gain that he made plus his capital, when he exchanges that to dollars, he cannot be able to get that initial capital, which is $1 million. So this is not a real gain. In fact, it is a loss. This is why foreign investors are not coming. For people who don't understand this explanation because of all the percentages, take for instance, you imported some products from China to resell in Nigeria, and your total cost, including customs duty and everything you spent, is $50,000. Let's assume by the time you place that order and send that money to the Chinese supplier, the dollar was exchanging for about 1,000 naira to $1. As a merchant, you must have a margin. That's why you're in business. If you don't make profit, your business will fail. Let's assume your margin is 20%, which translates to $10,000. Now you're selling the products. Because the exchange rate is not stable, you're forced to convert every naira that you make to dollars so that you will not be caught up by a high exchange rate. Every merchant knows that many products are not on the shelf. You have to place an order and the products will be manufactured for you. When it's ready, they will ship them to you. So you need to pay an advance to the manufacturer or the supplier. while selling your goods and converting all the naira that you have. And despite your increase of the price of your products in order to match the current exchange rate, is always dwindling. You might wake up tomorrow, it has increased by 50 naira or 100 naira. So it's not stable at all. No one can plan ahead with such dwindling exchange rate. So despite all the measures that you implement, you find out at the end of the day that after selling all the products that you were not able to raise that $50,000 that was your initial capital. Why? There's a limit to price adjustment. When the price becomes too high, it scares customers. They might say, okay, let me wait. Maybe the price will fall tomorrow. But we all know in the Nigerian market, it's difficult for prices to come down, especially when it has gone up. This is the main reason why foreign investors are not coming into Nigeria, because of the instability of the exchange rate. You bring in $1 million, by the time you want to take it out, you might not be able to get $500,000 in equivalent. It doesn't make any sense. You cannot plan ahead without having a stable exchange rate, coupled with inflation, which is exchange rate driven. Yes, because most products that are manufactured locally in Nigeria depend on foreign raw materials. They have to buy the foreign raw materials with dollars. So everything they calculate, the price per unit, everything is based on that foreign exchange that they have to buy. So if it's not stable, inflation will be on the rise. Some might be saying, what about local investors that didn't bring in any dollar, that they invested naira, they are reaping naira, they made money, what happened to them? Yes, remember one thing, the value of the naira has dropped drastically by more than 200%. Because 1 million naira today is not worth up to $1,000. That's the reality. This is why many people are buying dollars to keep their savings in dollars, because naira is losing value fast. If something is not done to stop the decline of the naira, many merchants might be forced to start trading in dollars. As a merchant, you must try to keep all your naira in dollars as fast as you can, because it is losing value fast. If you started business with a capital of $100,000, maybe 10 years or 20 years ago, today, if you're not careful, you might not have up to $50,000 left as your business capital. That's the reality. And the government is not helping matters. They keep printing money, borrowing money from the central bank. A few weeks ago, the National Assembly approved 7.5 trillion naira for their way and means. So whatever profit that investors made from the Nigerian Stock Exchange over the years, in terms of value, it is not actually a value, it is a loss. Because when you calculate inflation and the decline of the naira into everything, you see that you're left with nothing. Many investors that started out maybe even in the 80s or 90s with maybe about 1 million naira as their capital, the value of that capital today is no longer the same. Thanks for watching.